Hello, Chart Watchers, and welcome to this Tuesday, January 9th, Market Watchers Live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's jump right into the market action, give you a quick update on what's taking place. You can see here from a candle glance, got a couple of things here that I think I want to point out. Got the NASDAQ, excuse me, the NASDAQ having a pretty good day here, up 6 points at 7163. But take a look at the Dow, up another 110 points today. Big move on the Dow. S&P following suit. Russell 2000 also up today. Big news, 10-year Treasury yield is broken out above 250. The first time we've seen that since March of 2017. Leading today, we've got the banks and insurance companies both up. So we got financials doing well with that higher 10-year Treasury yield. But the best performing group actually is healthcare, up very nicely today, up over 1%. And you can see the biotechs bouncing off of their rising 20-day moving average, and the pharmas making a big breakout. One last note, transportation today trying to break out and close above 11,000 for the first time ever. We'll get back into some of these charts in just a few minutes, but first let me bring in my co-host, Aaron. How are you doing today, Aaron?
I'm doing just great. We're actually getting a ton of rain right now, downpour. I have to watch my atrium. We're afraid it's going to overflow because we just aren't used to getting this kind of rain. And then we actually have thunderstorms planned for this afternoon. So pretty exciting weather out here in Southern California for a change.
That sounds like a party or something.
We're having one. We're finally getting rain. You know, we did that rain dance. I guess it finally worked.
Yeah, it always works. I know we got a lot going on today, but first, I guess, go ahead and go through the announcements and the agenda with everyone.
Sure. So for our upcoming schedule and announcements, we do have Bruce Fraser coming in tomorrow, and that's going to be a great show. He'll be talking to us about Wyckoff trading. And then there is the stock charts outlook this Saturday with Greg. Are you doing that this Saturday too, Tom?
No, I will not.
This one. Not this one. So you won't hear that bickering between the two of them, but I'm sure they'll have I'm sure Greg has a lot in store for you. Let's look at today's agenda for Tuesday, January 9th. We're going to start with sector analysis. We're going to look at what's going on as far as sector rotation. And then we're going to cover we have John Hopkins coming in for an earnings spotlight. He'll show you some of the most interesting charts they're looking at on their radar. And we could see 10 and 10 to 1, of course. And our very first chart is going to be U.S. Global Investors Grow. So if you want to go take a peek at that chart and take your notes. And then finally, we're going to end with our segment Under the Radar. And we'll explain more about that as we get to it. But with that, I'm going to pass it back to you, Tom. I mean, what kind of technical news are you hearing out there?
Well, probably the biggest thing for me is the 10-year Treasury yield. You know, this is something I watch very closely, and there's a real strong correlation between the Treasury yields moving short term and the direction of the S&P 500, especially when the yields are rising. And the big key here is that when the 10-year Treasury yield is rising, it means the Treasuries are selling. And of course, proceeds from Treasury selling then can be reinvested in the stock market. So not only do you have new money that comes into the market, but then you also have money that is rotating out of the defensive treasuries and moving into the more aggressive equities. So here you can see a big move today in the 10-year Treasury yield. And this was not because of any big economic news. There really was no economic news out of any substance this morning. But you can see the breakout anyhow up to 2.54%. And if you go back and take a look, you can see on this 10-month chart that it's been almost 10 months since we've been back in this area. Early March, we did get up to about I think it was 261 or 262. That's exactly what it looks like we're maybe heading for, is to go back and test that level. So let me pull up a weekly chart here on the 10-year Treasury yield, and you'll see what I'm talking about here. But off of a huge recovery in the second half of 2016, 2017 really was spent more in consolidation mode, maybe basing. but this looks an awful lot like a cup to me after a big, long uptrend. And so maybe we get up to that 260, 262 area and consolidate a bit, but a breakout here would be very bullish. And of course, the Fed's been telling us that we're going to see higher rates in 2018. So it'd be really interesting to watch, but this pattern to me looks bullish. And so I would expect the 10-year Treasury yield to continue rising. The reason that that is important is if you're into the banks, you're going to like that news, because anytime we get higher interest rates, typically that leads to higher profits in banks. And you can see that this group, since that move in the Treasury yields began, let's go back and take a look at that chart again. We had a big move off that September low. You see that move right there? And now take a look at the banks and life insurance since early September. Banks straight up. And if I pull up the life insurance, you see the same thing. Big move to the upside. These are very strongly and positively correlated to the direction of the 10-year Treasury yield, both of these industry groups. But this is a really big breakout that we're making after we had pulled back to test price support. We tested the 50-day moving average, which has really been holding so far throughout this rally, and we're making this new breakout today. So unless we get a big reversal later in the day, I would look at this very bullishly. You can see that the life insurance index coming off of a MACD centerline test, just starting to point up. And that's telling me that price momentum is beginning to build again. We're starting to see that short-term moving average pulling away from the longer-term moving average, and that is very bullish for a momentum trader. So the life insurance life insurance index here looks good. Banks, as I pointed out, looks good. There is a negative divergence on the banks. That has me a little bit concerned, especially if we see a big reversal. But sometimes when you get these negative divergences, prices just keep going up, and eventually that negative divergence is eliminated. Healthcare is the best performing group in the market, and you can see after we went sideways for a few months, we did break out to start the year, so I'm not surprised in seeing some leadership here. The two key areas that I would really watch, we've got the biotech index, which had broken out above this gap resistance level, 2025, pretty good support. Yesterday, we talked about this coming down, testing that rising 20-day moving average and holding. And now we've got the biotechs up again, reversing that weakness that we saw yesterday. So really nice 25, 26-point move so far in the biotechs. That's up 1.25% roughly. And pharmas. I'm going to show you a long-term chart in just a second, but you can see on a short-term basis, we've got this uptrend moving right here. Nice breakout above the most recent high in December around the 535 level. And now we seem to be taking on perhaps resistance up closer to the 545 to 550 area. And that is really big, because if we look at the long-term weekly chart, this is a group that has been consolidating for a very long time. And if I pull up the home construction index, and I'll come back to this pharma index in just a minute, but you see what happens when you get these sideways, these long basing patterns, and then finally make a breakout? It can lead to some very significant gains. Now, I'm not saying every time you break out of a basing pattern, you're going to see this kind of a move, but a lot of times it does signal to traders that the sideways consolidation has ended, and that now you can begin to start to trade an uptrend, which is a much different animal than something that's moving sideways. So let's go back here and take a look at the pharmas, and this is about where we were maybe a year and a half ago on home construction with this sideways consolidation. So let's watch real closely to see if we get this breakout above 545 to 550, because if we do, we could be in for a pretty nice ride in the pharmas throughout 2018, maybe even into 2019, something to keep an eye on as we get into this new year. Let's see, we had a couple of other, or one other chart I wanted to show you here, and that is on the transports. I mentioned this would be the first time ever that the transports have closed above 11,000. It's just one of those psychological levels. The group's very overbought, but the volume has been supporting this move to the upside. This is not a light volume push to the upside. Seems to be a lot of accumulation. And again, you can see just here on this daily chart, but a lot of sideways action until we finally got the breakout in November. And that's what spurred this move. A lot of buyers getting very aggressive in the transport area. So something to watch into 2018, throughout 2018 as well. A couple of downgrades and upgrades that I'll go through with you real quick. On the upgrade side, talking about the transports, AAL was upgraded today. Did get a little bit of a gap up, but you can see that the overhead resistance continues to be a problem for American Airlines. 54 We've gotten up there. We saw it back in July. We saw it again in October. We got up close to 54. And then just last week, we threatened 54 and reversed, came back down. A close above 54 would be very bullish here. PayPal upgraded. The upgrade has created possibility of a breakout. We'll see whether or not it holds into the close. But after a huge move up and becoming very overbought back in November, we did go through a period of weakness on PayPal, sideways consolidation. But literally, once this downtrend was broken here to start 2018, it has been straight up. And now we get an upgrade today, continuing to lead PayPal to the upside. A couple others here, upgraded CCL. This is Carnival Corp. Another one that's been consolidating for a while. I think this could be a very nice breakout eventually, but we're going to have to get up and clear about 69.5 to do it. Right now we're at 67.72 and sitting really in what looks to me like, if you connect the highs and then you can connect these lows, looks to me like a little bit of an ascending triangle, which is very bullish off of this prior uptrend. A breakout above 69.5 would measure up roughly to about 76, 77 level. So CCL looking very interesting here with the upgrade today, although, again, we haven't quite made that breakout yet. T. Rowe Price. This is in the financial space, TROW. Got an upgrade. The stock already very overbought, but with today's upgrade, we are seeing some fresh new highs. This is just one that, could use a 20-day test. We had one to open the year, and then quickly we were straight back up again. And then the last upgrade was on KKR. And you can see KKR after, again, sideways consolidation, nice breakout, second half of December, increasing volume. And we have been off to the races, but the upgrade here is leading KKR up another 2.22% today. A few stocks that are being downgraded. First one is Under Armour. This one just can't seem to get anything going, although this is starting to look a little bit like an exhaustive period of selling to the downside. Very, very heavy volume. And since then, we have been battling our way all the way back up. Notice that we have filled the gap, though. So now we've got overhead resistance at 16.5, and we've got this rising 20-day moving average, which is trying to hold as support. Be interesting to see whether or not that holds with the downgrade today. JKS, this is in the renewable energy space. Stock was downgraded earlier today, and you can see very important support between $22 and $23. We did get down earlier today to $23.70 at the open, so far holding on. But we have this trend line that has had difficulty trying to break to the upside, and we got really good support around $22, $23 to the downside. So that continues to squeeze, and we'll see whether or not JKS breaks back to the upside or to the downside. Another airline, JetBlue, JBLU, downgraded. So while American Airlines was upgraded, we got JetBlue being downgraded. But after the lower open, you can see a really nice recovery in JetBlue shares. And actually, we have gone into positive territory, up 13 cents after a pretty big gap down earlier today. Notice, too, that this gap down really comes in right at about where we broke out from, 2075 or so, maybe just a little below 2075. So if I annotated this chart, I think maybe you'll be able to see it a little clearer. But right here was that prior high, the double, triple top that we saw in October, finally made the breakout. Look at the volume come in. And then today with the downgrade, it brings us all the way back down to test price support and that 50-day moving average, and now we're turning up. The other thing I find really interesting here is check out the recent highs, higher prices, lower MACD. What do we want? 50-day test. And we got that with the downgrade. Pretty interesting connection there. Let's see. We got maybe one or two more here on the downgrades. Allstate, ALL, was downgraded. I actually like this chart, though. Higher prices, lower MACD. I'm looking for a 50-day test. I think we've gotten it. And even with the downgrade, the stock's only down 19 cents here. And that last breakout came at about $100. So very close to price support, getting the 50-day test, and really approaching that MACD centerline reset all pretty much at the same time. So I think ALL looks interesting. And then the final one I have here is ABB. This is ABB Limited. Again, very nice uptrend. The stock gets downgraded. The market really doesn't even care. The stock's down 7 cents. So again, that rising 20-day moving average there would look pretty strong on any pullback. A couple of stocks in the news, getting into some of maybe the retailers here in just a second. But first, company that did report earnings today and missed on the top line, missed on the bottom line. I don't know if this is going to be an indication of what we'll see in the earnings season upcoming. I wouldn't think so, given the huge rise in the market. But Acuity Brands, AYI, they came out. Their earnings per share were $1.94. Market was looking for $2.09, and their revenues came in at $842.8 million. The market was expecting $874.4 million. So a big miss on both. And you can see that the overall downtrend, even though we did have a nice uptrend going into their earnings here, it wasn't a whole lot of volume throughout much of this move to the upside. And with that miss, we are quickly down at the 2017 lows, or getting close to it. So AYI not looking great. A couple of stocks with preliminary numbers out. Globus Medical, GMED, they came out with revenues above consensus, and they initiated their 2018 revenues and earnings per share above expectations. Stock got a nice gap up, but with already pretty heavy volume today, we do have a black candle there, so we might be printing a short-term top on GMed. This is a move up maybe on the rumor. Then the news hits today that they're raising or that their preliminary numbers are going to be above consensus, possibly get a black candle. That could mark a top, something certainly to watch. And Stryker, SYK, preliminary numbers out, earnings per share at the high end of their prior 645 to 650 range. So they're looking for numbers, probably closer to that 650 area. Again, nice move up prior to the announcement. Then the announcement comes out and possibly a bearish engulfing candle. We'll have to see how we finish today, but that could mark a short-term top on Stryker as well. And then one last one that I have, and then I know Aaron has a few for you. Target came out. Target raised their guidance. They had excellent holiday comps. Stock gaps up. And you can see, again, this is another one where we've been moving higher. For the most part, volume trends are strong. Today's volume very heavy on this breakout. But you look at Target. Yesterday, we got great news from Kohl's. Walmart's been doing really well. And so not surprising that Target also did well over the holiday season, continues to move higher. So with that, I know you've got a couple. I know a couple of disappointments, Aaron, and then one I think that was a positive. But what do you have? And I can't hear you if you're talking. You may have to unmute.
Thank you. I always try and mute when I'm not talking, so nobody hears me talking to myself. So anyway, Big Five came in with low. The two I'm going to look at came in with lower. They've lowered sales expectations, and we could see with Big Five that gave us that big gap down. And some people might look at it, given that we're coming down to this area of support, that could be an island. I don't look at it that way at all based on my PMO. I mean, we just got that PMO sell signal, and notice it topped and gave us the crossover before this big drop. So, the PMO can give you some warning that there might be some problems. And, given that 50 is so far below the 200, I would have bearish expectations anyway. So definitely I would not be looking at that as an island at this point. And the other one we had, let me see, I don't know if I made, I didn't actually make charts for these, but I can get there. So Urban Outfitters. And if I recall, Tom, I think they've been sitting on the top of the scooter list, or were for quite a bit. Yeah, you can see right here. And then, they lowered their sales expectations. And again, we got this big gap down. And again, I'm not looking, I mean, we're in a better situation. You have the 50 pretty far above the 200-day EMA, but look at that 520-day EMA negative crossover. But again, if you look in that thumbnail, we got some good warning for this one. We had that PMO sell signal, and it came in, if you look, came in really right at that top. So something to consider, if you're holding, like I said, I don't necessarily trade on, a PMO sell signal, but this would have given me warning that we might be looking at something brewing that wasn't good. And you can also see the fact that it was, it gotten into overbought territory for it. The range is negative 7.5 to 7.5. And then
also, Aaron, you may also show the seasonality on Urban. I know a lot of these retailers, they struggle in January, even though February through April tend to be really strong months. The January month tends to be really weak, and URBN and a lot of the retailers seem to be going into the year with negative divergences as well. So,
yeah, And we'll be talking a little bit more about that sector, the consumer discretionary. So yeah, you can tell. I mean, February doesn't look awful, but wow, look at that January. And this is really soft, with that kind of a gain, if you get that kind of a gain. So yeah, and the other one I'm going to look at, and this, they actually I think they posted good earnings, if I recall.
Well, they came out and expected to report revenues of 2.9 billion, and the market was expecting 2.74. So
that's what it was.
Yeah, on their revenue side.
Yeah, and we've been looking at a rather flat PMO here for a while, and you're going to get a flat PMO if the acceleration is steady. And so that is where we got a lot of that flatness. But you can see we're finally getting readings now above those previous tops. Yeah, not a big surprise, obviously, with that giant gap up. Excuse me. And we got up to this overhead resistance area and we pulled back. I think that's still not a bad thing because we're pulling back and we haven't gone below that gap that we have here. So I think there's certainly, it's now come back after this breakout. And it is, when you're looking at that intraday, it closed near the bottom of its range, but now we can see that it's managing to hold that area as support. So, with that kind of a reading coming out, look at a volume. Of course, we already were showing that big interest yesterday, and the scooter's back up. It's looking pretty good at this point. And my only concern would have been this area of overhead resistance. But let's face it, intraday we did get above it. Haven't been able to close above it. But that's still, even if we got a $47 to $48 move just to retest that close we had back in April, that's still a tidy little profit, I would say. I want to look at the weekly chart real quick, and then we'll move on into some sector analysis, but give me 2 seconds here. So you can see how important breaking above this area of overhead resistance is, and it even lines up pretty well with some of these tops and bottoms back here. So I think that we're looking at a pretty nice formation, and yeah, good PMO. And with that, let's go ahead and look at some sector rotation with our sector analysis segment. And I'm going to start just by going to the RRG charts. And I'm going to show you the easiest way to do this. And they are available to you, whether a member or not. You go into the free charts area and scroll down here to our relative rotation graphs. And this will launch the RRG workbench, so to speak. And it automatically is going to come up with the major indexes here. But that's not what I want to look at. I want to look at the sector spiders. So here's where you can select the universe that you're going to look at. I only want to look at these sector spiders. So that brings me right up on this picture that we have here. I'm going to change it to a daily, mainly because I want to show you what's more recent as far as where we're going with some of these rotations. So what I find the most interesting, obviously we can see that materials and energy are sitting in that leading group. But what is a problem, of course, is that they're starting to head south. We're looking at a southeast move. And remember, you really want to see a northeast move. That tells you that you're moving into a better sector. It tells you you're strengthening. So when I look at this, and I know it's a little bit messy here, I'm going to scroll in here. This is how you can get a little closer look. XLY consumer discretionary, it's a little hard to tell here, but they are moving south and slightly southwest. So those are two sectors are not looking quite as good right now. What I wanted to really center on, and I'm going to bring this out just a bit here so we can see everybody. And what I wanted to center on is the two that are in the improving sector. And they, of all of these, when I was looking at all of these moves, they were the only ones going in that northeast direction that we want to see. So I'm going to show you, if you click on it, it'll give you just that particular one. So I can zoom in on it like that. And there you go. So we're starting to see this move to the northeast. Again, compass points. Julia says that's really what you're looking for, are those moves to the northeast. And that's we're getting from XLV, of course. And then we're also seeing that with technology as well. And there you go. So those are the two sectors that I wanted to concentrate on, just because those are the ones that are leading right now as far as rotation in the shorter term. So I'm going to go take us over to a chart that I have on XLK and XLV. I need to get to the right screen here. And all right, here we go. This is a chart list that I have, and I actually do a scan on every single day because it has all of the major indexes, the major sectors, and sector equal weights. So I look at the equal weights as well as the cap weighted, your spiders. So let's go ahead and we're going to look at XLK to begin with, the tech, because remember, these are the ones that we're moving northeast, that we're looking better. All right. So I wanted to give you a peek at the charts here, and I'm going to annotate here so you can see it better. All right. So last time I really looked at this particular chart, obviously we were back here when I was using it, which is why I've got these movements going. But when I was pointing it out, we had gotten the PMO buy signal, and we had also gotten a breakout from this overhead resistance. So that was my clue and what I wrote about at the time, that things were looking pretty good here for tech. So right now, where are we? We had a really nice rally. And and honestly, when I look in the thumbnail, you know, if we continue with this little bit of consolidation, you know, if we move sideways just a bit, take a bit of a pause, you know, we're going to form a flag with a hefty flagpole. And, you know, to me, looking at that buy signal coming in, you know, the one thing that isn't like the greatest about this chart is when you look at the PMO bottoms, they're moving just slightly downward, and we have quite the upward swing on that rising bottoms trend line. So that is somewhat of a negative divergence, but given the 50 being so far above the 200, I would have bullish expectations at this point for this sector. And we do want to continue to see rotation into tech, and we want to see the NASDAQ do well because, you know, it's been lagging somewhat. And so now it's catching up, and it could be a leader at this point. If tech starts leading, that's always good for the market. The other one we wanted to look at here would be healthcare, XLV. There we go. All right. Okay, so again, these are somewhat old. Let me fix this so we can see this chart, which I'm sure it's tiny to you guys. So let's just go to my defaults. This is something we can show you at another time, but if you get your chart styles up, you can make buttons of them on the left, so you can just immediately go to the way you want to look at that chart. So what I wanted to point out with healthcare, now notice we have a positive divergence, so to speak. Positive, I would say bullish confirmation. That's the correct way to discuss it. As you can see, the PMO bottoms are rising with the price bottoms, and that's great. And we got that nice breakout here. We got a test. It did give us a little bit of whipsaw here. We ended up with that sell signal, but we moved into the buy. It's moving up nicely. So I'm liking the look of healthcare at this point. What were you going to be looking at, Tom, as far as rotation goes?
Well, I'm going to start off with an industry group right inside of healthcare.
Oh, so, perfect.
Yep, very nice little segue there. And I talked about this a little earlier in the show, but the pharmas, a couple of things that I'll point out here. First, the recent pullback, I think, was nice because it did come back down and test a trend line. So if you kind of connect these lows right in here, you can see that this was a pretty important trend line to hold. We also were right around both moving averages, went just a little bit below and then took back off and took out the prior high. But the thing is, you know, when you're looking at a chart, you're looking for uptrends, downtrends. An uptrend is made up of a series of higher highs and higher lows. So you've got this pattern going higher high, higher low, higher high, higher low. And now if we can make this breakout today, we can extend it. So from a short to intermediate term, look at pharmas, I think it's pretty clear that we are in an uptrend. The question, though, is can we make the breakout from a longer term perspective? And that is, really important as a trader looking for opportunities perhaps later in 2018. If we can get a big breakout, that would give us not only the short-term uptrend, but a longer-term uptrend. I think that would be really important. And I showed this chart earlier, but I'll show it again here. This sideways consolidation can be extremely bullish on a breakout. So I'm watching the pharma group. I think this is one, just because we are in a bull market and we do generally see rotation, I'm expecting this to break to the upside, maybe sooner rather than later. And this could be a very interesting area of the market in 2018. So that was one area or one group that I wanted to talk about. Within energy, it's no shocker because we have seen the oil equipment and services stocks going straight up. But I think this is pretty significant because while a lot of areas are up after being up all of last year, this one's just starting to make a move to the upside after downtrending, sideways consolidation. I think we have really a bottoming head and shoulder in pattern where you have a left shoulder, neckline, head, right side of the neckline. The right shoulder doesn't quite come down to the head, and then we get the breakout with increasing volume. So I think this could be signaling a much more significant increase and incline throughout 2018. So I would expect to see higher prices for the oil equipment and services stocks. And within that same space, if you pull up the DJUSOL, which is the Integrated Oil and Gas Index, this one bottomed a little sooner than the last that I just showed you, but you can see on the move up, we held price support on the way back down, moved up again. And once again, we've got this series of higher highs and higher lows, with really the last month being a very impressive move to the upside. Yes, we're overbought, but we've seen that many areas of the market remain overbought for a period of time. So I think the takeaway here is that energy has certainly not only begun to improve, but actually starting to lead the market to the upside, which I think is very bullish. So this is another index industry group within a key sector that looks a lot better to me than it did just a few weeks ago. Couple of areas in the market, everybody, when you look at technology, you think internet, you think semiconductors, you think software. Well, I think it might be time to start thinking about mobile telecommunications. Really big gap down back in the beginning of November. I think this is an exhaustion gap. Huge volume. You're normally looking for the biggest volume on the chart. I think we certainly got that. And after this gap down, almost immediately after the gap down, you can see we continue to trend higher. And we're starting to take out some pretty key areas. I think 330 is a big number, and we are right at that number right now. So the DJUSWC, while it has been downtrending for a while, could just be starting to make a move back to the upside. You can see that this downtrend that started back in the summer had a double top in the summer of 2017. We started coming down, but notice this exhaustion move to the downside came right at price support, which held, and now we're making our way back up. I think off of this uptrend, what we could be looking at is one of two things, either a cup right here or possibly left shoulder, inverse left shoulder, move back up would establish the left side of the neckline. This move down would put in the inverse head, and now we're making our move back up toward 360 in that area, maybe to print the right side of a neckline. Either one of these patterns is very bullish. So the move back up through that falling 20-week moving average, I think, is extremely important. Anytime you see that declining 20-week and you can get back up and start holding it, look at what happened in this case. So that is all until the trend, which is now reversed, until it proves otherwise. I would say that the trend in this group is higher. And this is one that's a little bit below the radar because it hasn't been performing like many of the other areas of technology. And the last one I'm going to bring up, this is in the financial area. The DJUSEH, which is the real estate holding and development. We did make a breakout just recently. You can see some of, another one of the big drops here. But I think very similar to the pharmas, which I just showed you a few minutes ago, I think this trend line off of the bottom here is pretty interesting. And we really just went down and tested that with this most recent low to the downside. So I think we got a nice uptrend in play here. And more likely than not, I'm expecting to see this begin to rally back up. It has dropped about 5% just since the beginning of the year. So not every area of the market's gone higher. This one's pulled back and could be poised for a little bit of outperformance in the near term. So something to consider. And so that's all I had for the sector analysis. So just to kind of recap, you can see Erin's selections, or what she had talked about with the RRG charts. And she spotlighted the XLK and XLV. And then I gave you a number of industry groups within some of those key sectors to kind of keep an eye on. All right. And with that, it's been a few weeks, but I'm going to bring Mr. Hopkins in here in just 1 second. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com is a trading service designed to set up high reward to low risk trades. This trading strategy resulted in a 2017 risk-adjusted return that easily outperformed the benchmark S&P 500, fivefold actually. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they'll teach you how to spot great trading opportunities that focus on both strong fundamentals and strong technical charts. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. Well, how were your holidays, Mr. Hopkins?
Well, you know, Tom, I wasn't expecting to be buried in snow in Charleston.
Yeah.
But it happened. You know, I kind of moved away from originally I was born and raised in Detroit, so I moved south to the DC area. The bad weather seemed to follow me for 30 years. Then I've moved to the Charleston area just a couple of years ago. And I think this is the biggest snow they've had in, I don't know, quite a few years. We got 4 or 5 inches. Everything shut, and they don't have any equipment here.
Yeah.
They have no snow plows. I don't even have a shovel.
Yeah.
So I had to use the broom, to try to sweep away the snow.
Mm-hmm.
And a little challenging, but I got it done. Now it's beautiful in the 60s, and I'm happy again.
Well, I mean, if you think about it, though, I mean, Detroit is not going to invest in a bunch of beach umbrellas, right?
No, that's true.
I mean, who's going to expect snow down in Charleston, South Carolina? I mean, it's supposed to be an island area.
It wasn't me, I'll tell you that. But anyways, listen.
Yeah.
I'm getting excited, though. I'm like a kid in a candy store because starting this week, we're going to start getting some earnings reports come out. And then, Tom, over the next 3 to 4 weeks, literally thousands of companies are going to report their numbers. And that's what we're about. We're about focusing and looking for companies that beat earnings and see what kind of trade candidates they can be. I'll give you an idea of a few companies getting ready to report. It's a bit financial centric over the next week or two.
Mm-hmm.
Friday, we're going to get JP Morgan. We're going to get PNC Financial. We're going to get Wells Fargo.
Okay.
And then beginning of next week, Citigroup's going to report. Then we start getting, we got CSX reporting, UNH, some health companies starting to report. And then Friday, we're going to get Kansas City Southern and Schlumberger.
Okay.
So, and then, once we get past next week, that's where the real meat starts. That's where you start getting into a lot of the tech companies.
Mm-hmm.
We'll start seeing the big names, the couple of weeks after that. It's going to be, something to watch. And I'll tell you, expectations are high. And you can see what's happening with the market here. Expectations are high, and they probably will come through.
Yeah, I don't know if you saw earlier, but I, saw pulled up a chart, AYI. This is Acuity Brands.
Yeah.
The company that missed on their bottom line and top line. You can see that the stock actually had trending higher into earnings, but they came up with a miss. And this is kind of, I think, setting the table for a lot of these companies because they are being priced for perfection.
Oh, yeah.
They are not being priced for shortcomings. I mean, you might have some companies that'll get away with a little bit of a miss, especially if they have strong guidance going forward. But most of these charts are not set up for earnings misses and revenue.
Yeah. And right. And we preach all the time, right? Don't hold stocks into earnings.
Mm-hmm.
And, it's kind of a good segue. So we got a lot of earnings coming up. So over the next, month when I'm on the show, there's a lot to talk about. But I want to mention that, last night we had this webinar, and of course you were featured. And man, I was taking furious notes. Um, the webinar, focused on industry groups and sectors that could be poised for nice moves during 2018. I was absolutely amazed at how much you covered during that period of time. And I'm going to go back and listen to it again. And I only want to bring it up because it was a webinar we had. It was a free event. And I pointed out, Tom, because it was awesome. You spent, I think, close to an hour talking about the industry groups and sectors, pulling up the charts on each one of them. I learned a lot. And, I'm going to be looking at that because if you can combine strong sectors with strong earnings reports in companies that report and they pull back to key support levels, to me, that's gold.
Yeah, I know last night I counted them afterwards because I was tired of talking, but I went through 25 industry groups and covered, looking at some of them had done okay in 2017, like biotechs, had done pretty well. I was really trying to find stocks that were making, or industry groups that were making breakouts potentially look like they were approaching key levels where if they did make the breakout, could result in a very strong 2018. I mean, if you look back, and I'm always looking back at history to try to figure out, how to approach the stock market. And I think history is a great teacher. And when you look back at the beginning of 2017, you never would have guessed that home construction would have been the second best industry group. You probably never would have guessed that renewable energy was going to be the number one group because they were both doing nothing really as we headed into 2017. But once they make their breakouts, and they start acting much more bullishly. And when I say act bullishly, I mean, once you make a breakout, what I expect is if you're truly going to be trending higher, then when you pull back, you should hold that rising 20 period moving average. So on a weekly start, you should come down, test those levels. That's exactly what both home construction and renewable energy did last year. Once they broke out, they came back, they held key support levels and then took off. And I was just talking about the pharma group, and that was one of them that I featured last night as well. Because if that group breaks out and then comes back and starts holding some key support levels, it's starting to give that feel of an uptrend, and then you get that breakout to boot, and it can be a very powerful move for sure.
Very awesome. Anyways, if somebody wants to see that webinar, it's free. You can go to earningsbeats.com, and at the top, Tom, you'll see a link that says holiday special. And it only says that because it's the new year. Okay. Yeah, right there. So you can basically go in and see the webinar.
Okay, cool.
All right. So, people can do, and while you're there, go to the chart of the week there, because I'll talk about that right now real quick. I've got just a couple of stocks. This is NCS, if you can pull up a chart. This was featured as our chart of the week. And I like it. I like it where it is right now. It made a beautiful move up and then came down, pretty sharply. But look it's pulled right back to the 20-day. That's my stop. I don't want it below the 20-day. So I want to get this as close to support as possible. And I think if this thing reverses, it could easily add a couple of bucks. So NCS is something to me is worth looking at.
No doubt about it. I mean, I like these moves. Anytime you get a move like this after sideways consolidating for a while and you get that heavy volume on that move to the upside, it does provide some pretty good support. And I would even, maybe take a look at the price level on that breakout, which was here. And you can see after breaking out, a lot of times stock goes from, 16 and a half up to 21. And the last thing you're thinking is that this thing could possibly pull back to 18 and a quarter or whatever. But it did. I mean, now there may have been news or something involved, but a lot of these stocks, and we've seen it many times, where you just have to have the patience to allow these stocks to come back. And if they don't come back, and not all of them will, that's for sure. If they don't come back, you've got thousands of other stocks to choose from. So you don't have to, I've talked to you. I don't know if you remember this, but, and I won't mention any names, but remember we had a member a long time ago who used to trade only Lam Research. You remember?
Yes.
I didn't even know why he was a member because he only traded one stock, but it was LRCX.
Yes.
I mean, he knew that stock inside and out, but there's not always a trade on a stock. And I think sometimes you force trades if you're only looking at a handful, especially if you're looking at one stock. But there's always a trade out there. You just have to be willing to go look for them.
Other couple quickly. I'd like your thought on this too. I'm seeing, it's really interesting. Pull up AVAV. This is a company we put out to our members yesterday as an alert. And it made a beautiful move this morning. It made its first attempt to get back over the 20 and failed. And you see now it's pulled back. And I'm hoping, that this thing gets a reversal, but you wonder if the kind of market we're in right now, Tom, which is so stretched, that any profit that traders get, they seem to you want to take it right away now.
Yeah. Well, first of all, I have to disclose I own this one. So,
okay.
I like the stock. I mean, if I was, I think if the volume were heavier, I'd be a little bit more concerned about the failure today at the 20. But I mean, really what's important to me is that price support I've talked about this one on the air before, but that heavy volume gap up and continuing move to the upside. I think this pullback the last couple of days, I mean, we may see some consolidation at this level. And if the stock were to go much below $52, I'd be really careful with it because there's not a whole lot holding it between 52 support and the bottom of the gap, which is down at $43. And last thing I want to do is have the stock down $7 or $9 from where it is right now. So I'd keep a fairly tight stop, but I do like the stock at this level because when you do get gap ups like this, and I love playing earnings related gaps, and this gap with heavy volume and the continuing buying to the upside tells me that this should be pretty good support. And the fact it hit it, yes, it's not great to see it up earlier today and then come back down and be back to even, but I think that there's just some consolidation going on. I still expect eventually that we'll move back up toward the upper end of the range, at least for me. I hope so.
All right. And last one is, this is an alert to our members today. This is SORL, Auto Parts.
I love that sector.
Right. And take a look at that and look what happened, back in the middle of November, right? That tremendous move to the upside on huge volume. It pulled back. Been watching it pull below the 20, back above the 20. We got involved today at 725. I think if this thing holds, minimally, it's going to get back to that 790 level. And if it pierces that, maybe try that high that we saw back in November. Got a stop of a close below 698. It tested there a couple of times. That would produce about a 3.5 to 4 to 1 reward to risk on this particular one. And that's what we always try to do. We try to scan for stocks that are near important support and have 3, 4, 5 to 1 upside potential to downside potential. It's why all during 2017, on our trade alerts, the average gain was about 6.2%. The average loss was about 2%. That allowed us to really beat handily on a risk-adjusted basis the S&P. And I can't drill into people's heads anymore the importance of the stops. And I talked about this in the webinar. If anybody looks at the webinar, I talked about IMAX and how we got out of that even, and people who didn't honor the stop, just continued to move lower and lower and lower. So you can see, haven't you done it too? I've done it, Tom. Got to stop in place. It pierces it, and you say, I'll give it a little more room. And then it pulls, and you say, oh, this looks pretty good, a little more room. And the next thing you know, you're down 10 more percent. You say, hi, and you get out.
Yep.
And you've turned something that was a flat into a big loser. There's no need to do that.
Yep. I'm going to show one other thing here, and then we're going to have to get running. But
okay.
With this SORL, you were talking about the auto parts, and this is a really interesting group. And I think, again, kind of tells you what happens to these stocks or indexes and industry groups once they make key breakouts. I'm going to pull up a weekly chart, and I want you to take a look at the auto. Look at this sideways consolidation. This is a weekly chart going back 5 years.
I see it.
Group that for, I don't know, 4 of the 5 years really went nowhere, just went sideways. And then all of a sudden in late August, it looks like, made this breakout. And notice how the rising 20-week moving average was holding. So it was starting to give that bullish feel, and then it made the breakout. And even after it made the breakout of 500, we're now getting up closer to 600. And this has been 3 months later. It's really important to watch these bases because I do think that they can provide some great opportunities in that base down the road. I mean, if you look at the auto parts, I mean, it did have some pullbacks here along the way, got close to that rising 20-week moving average before taking off again. So it'll probably give some other great opportunities down the road. But this is certainly a really good space, in my opinion, to be trading.
Mm-hmm. All right. Well, listen, thanks for having me on. You guys have a great show as usual. And I guess I'll be back next week.
All right. Sounds good. There he goes, Mr. Hopkins, and the earnings spotlight segment. We do try to do this once a week. And as we get into earnings season, I think it'll be really important to continue to get updates and really follow how these companies are reacting to strong earnings reports. If all of a sudden we start seeing some really bearish action after these reports, then it could be that we are at a pretty important resistance level. But until we get there, I would continue to stick with the trend.
All right, I'm back. As we get ready for the 10 and 10, I did want to mention that we do have a big sale going on the Stock Traders Almanac for 2018. As you can see, it was $50 and it is now $29.95. And I happen to know we only have 35 more copies. It's similar to your Farmer's Almanac, but about the stock market. So quite interesting. If you want to know how to get to it, I'm going to just show you very, very quickly. If you scroll all the way down to the bottom of your home screen or any screen here, there's a link on the right for the Stock Chart store. It'll bring you right here, and right on the front homepage for the Stock Charts store is that Stock Traders Almanac, and the rest is self-explanatory. So with that, let's go ahead and start that 10 and 10. And if you recall, Tom, our very first one is U.S. Global Investors GROW, G-R-O-W. All righty. I don't hear you, Tom, if you're talking. So need to unmute.
How's that?
Oh, now I hear you.
Sorry about that.
I do the same, obviously.
Yeah, I was just saying, I think that's a pretty good deal on that book because, of course, I follow a lot of the historical and seasonal patterns. So that is definitely something that I think would be a wise purchase. And I don't believe the new edition comes out till sometime much later in 2018. So great opportunity to get it at a big discount. But I did already annotate U.S. Global Investors GROW. And first, I just highlighted a couple of key levels of support. You can see this stock is extremely volatile. We've seen some huge moves from $2.50 up to $7 in the course of about 5 or 6 trading days, and then back down to $3.50, and then $7.50, and then back to $3.75. I mean, it's all over the place. So the question is, where can you possibly get in and try to reduce risk as much as possible? And for me, it's really in about the 335 to maybe 375 area because we have some price support. We have trend line support in that area. So I don't think, even at the current price, it's certainly well off the high, but it would be pretty unnerving for me to buy this at 444 and still be holding it $1 later. And you still do have some support down in that area. So I would just say, be careful as we do get closer, down below $4. I think the reward to risk begins to grow and looks much better at that level.
All right. The next one I have for you is, it is a Canadian stock, but I went ahead and got the US version, which is Aurora Cannabis, ACBFF. Aurora Cannabis, your BFF.
There you go. Yeah, it's just way overbought. I would have to see a little bit of a pullback. We didn't see much pullback on the last, after we had the last move. And so I do expect that we will get one at some point. That'll probably scare a lot of folks that have gotten in at the high. But I'm looking at a key price support on this breakout. And look at the volume coming in. The breakout was at about 670, 675. I know we're up at 1095, but it would not shock me to see a move back down and maybe to get in initially on a 20-day test and then save some powder for a possible price support test around 675. That's where I would be looking. I would not be chasing because if you do get a normal test of price support, you're not going to feel very good about that pullback. It's going to be really difficult to keep your emotions out of the trade. So I would be waiting on a pullback here. I like the stock. I like the action, but I've got to get it closer to where I can keep a stop somewhere nearby.
All right. Okay, the next one I have for you is Micron, MU.
Yeah, starting to see a little bit more strength in this area, even though we are down today. I think that the chart is beginning to improve again. $47 obviously was a little bit of a problem. So I think the two key areas when you look to the top side, clearly the late November high marked a pretty significant high, at least in the near to intermediate term. There's your reaction low coming back down, pretty close to the low that we saw over here. In fact, I would probably even grab this and maybe go just a little lower, because that was the reaction low here. And then we double, put in a double bottom there and tested it with that move back at the beginning of December. So I think right now we're just sitting in the middle of this pretty wide range on Micron between 39 to the downside and 50 to the upside. If the stock were to start working its way back down toward the lower 40s, I actually like it as a trade. I think the reward to risk at that point would really start to strengthen. And to the upside, I'd probably be a seller in the upper 40s until we can see that we can get a breakout above that $50 level. So I like Micron. I just think right now it's sitting in the middle, maybe a no trade at this point. But ultimately, I do see this one going higher.
All righty. Next one I have Precision Drilling Corp. And we'll go ahead and look at the Canadian version, PD.to.
All right. I do like the action here. Getting back above what appears to me to be a bottoming head and shoulder breakout around $4. So if I were to annotate here, I think you can see that the tops that came in. So we were in a downtrend. Anytime you're talking about a reversing bottoming head and shoulder, that follows a downtrend. If you don't have a downtrend, then you can't have a reversing head and shoulder bottom. But off of this, you see a low that marks the left shoulder. You come back up. And notice as you're coming down here, by the way, every time you're putting in lower lows and lower highs. So the beauty of a bottoming head and shoulder pattern, reverse head and shoulder, is that after you put in this reaction high and you go to a new low, instead of printing a lower low, you go back up and you actually get back to where you were before, and that establishes the neckline. Then you come back down, you put in the right shoulder, and now we're getting this move up and through. Now, the combination of price support at $4 and that rising 20-day moving average, which currently is at $3.80, that is where I would want to see support hold. So for me, PD.to is a buy and continues to be in an uptrend until we lose both price support and that rising 20-day moving average. I like this one.
All right. Let's see. The next one I have for you is Electro Scientific Industries, ESIO.
I actually traded this one, and I was looking at it again recently. I really like it in the 19s, and it kind of held up around 20, so I haven't done anything with it. I'm just watching, but I love the volume trends. When this stock made a move up, I mean, you can see the volume here, and really going back throughout this the last 10 months, you can see the volume trends have been pretty strong. Now we have, seen some weakness at the end of November, early December, and the volume was pretty big, but I think we're consolidating in this range. So for me, the key areas, and I could probably bring up a few of them, but probably the number one area is going to be after this huge volume gap up. This was earnings related. You can see that day we traded down around the 19.25 area before going all the way up to 28, came all the way back down to 19.25, and now we're consolidating. So I think that's a key area. I think the breakout above the prior high around 18 is a key area. And then, of course, you've got the bottom of gap support. So I don't know how exactly you want to set this up if you're looking to trade it, but these are the three key areas. For me, I'm going to be watching this 19.25 level pretty closely. And anything in the 19s, I would actually consider buying personally, but it is volatile. It is aggressive. So keep that in mind. But ultimately, the target for me is all the way back up here around 28. So I think ESIO looks pretty interesting. And I think this sideways consolidation will ultimately break back to the upside.
All right. Next one I have is New Gold Incorporated. It's a gold miner, NGD. Pulled back quite a bit today, like gold.
Yeah, I'm not a gold fan. I've said it before. I know I have a different opinion than some here at Stock Charts, but I just don't think that this group has outperformed the S&P 500. And so I tend to stay away from it. I'm just not a fan. I talked about it, by the way, a lot in that webinar that John was just mentioning. this, commodity area outside of maybe energy, copper I like, but gold, silver are just areas that I personally would avoid. I just don't think the group is performing very well. Now, having said that, because of that, I wouldn't be buying this breakout above the 20. I just don't like the group, and I'm not shocked that we came back down and failed to hold the rising 20 because, again, it's a group that I don't think is going to sustain its move to the upside. So I personally would avoid it. I think from a technical perspective, if I just assume I don't know what this stock is, then I would probably be looking down around the 295 area, that recent low. I don't want to see it go back down below that area. We do have a downtrend that still remains in play off of the high back in September. So I think for now, we're probably between 295 and 350 in terms of a trading range. We're sitting in the middle of it, but I suspect we'll see 295.
All right. Next one I have for you is Carnival Corp, CCL. Not that exciting of a chart.
Yeah, I was looking at it earlier. I actually do like the chart. I think that this is a nice uptrend followed by an ascending triangle. So first thing that I would do when I was annotating was just kind of mark this uptrend. And then for patterns, I always like to use the black. And for me, we've got pretty nice double top there. And then when you come in and connect these bottoms, I think you've got a really nice ascending lows. So I think you've got an uptrend followed by an ascending triangle. So I do expect a breakout off of this, especially being in a bull market. And this measurement here is roughly about 6 or 7 points. So I would look for maybe about a 76, 76 and a half measurement on a breakout on Carnival.
Wow. Okay. Let's see. The next one we have CNQ, and the request was to look at it on a weekly chart in particular. So CNQ.
All right, CNQ weekly. And I'll go back 3 years. Yeah, I mean, I like the action. I think when you take a look, and this is what I was kind of referring to earlier, sometimes before you even get a breakout, you start to see signs that a stock is acting more bullishly. So I think you can see here, first of all, we had an uptrend. I think we've got maybe a little bit of an inverse head and shoulder. Maybe you can just call it a cup or sideways consolidation, whatever you want to call it. But notice as we moved up above the 20 here, we lost it. We moved up above the 20 here, we held it. Went back up, tested resistance, held the 20 again, broke out, held the 20 again, and broke out again. Every time we move above the 20 and hold it on a pullback, I start thinking much more bullishly. That to me is a trend type of a move. And so I think CNQ right now looks very good. And I think, again, as long as we hold on, we got some price support at 34, and you've got that rising 20 week right now, 34.18. So I still like this one. I think this one looks pretty good right now. Do you have another one, Aaron?
Yes, I do. PetMed Express, Pets, PETS.
All right. Well, I've still got the weekly up, so I'll just go ahead and hold on to this. I think it's a pretty nice little cup off of an uptrend. So we can take this, and you can see there is the uptrend, which I think is pretty clear. And then we can get into the parabola, which again, with these patterns, I like to just put in black, but right here, I think we've come all the way back up. So I think we have a nice cup. Now, it's a little sloppy with the gap ups and so forth, but I still think off an uptrend, this is a nice rounded cup. And ultimately, a breakout here would measure up, believe it or not, to about $66 or $67. I'd like to see a little consolidation. Best entry would be on the rising 20-week moving average, which is all the way down at 42. So maybe we just go sideways here for a little bit. But I think the chart looks very bullish. I like the pattern here.
Okay. The last one I have for you is QRVO in the technology space, of course.
All right. Well, we'll just hold on to the weekly chart since that's what I've got here. I think it's just sideways consolidating. I mean, we've been trending higher, so I think that's a good thing. But you can see the recent highs. Also, you can see the lows back here in earlier in 2015. You can see lows at about the 63 area. And then after breaking down on pretty heavy volume, The reaction high here back in July, August of 2016 was right back to that 63 area. And then finally we break out, and now we've just been going sideways between 63 and 80. Now we're sitting at 69, so I think we have a little bit more upside than we have downside. So if I had to take a position, it would be on the long side. But I actually like this. If it fails at that 20 and can pull back and get closer to 63, 63 and a half, I think your reward to risk at that point looks a lot better. So I'm still bullish the stock, though. I like the overall market. I like this pattern that we've seen really for the past couple of years. And so I would expect after this sideways consolidation that we will get a confirmation of a breakout above 81 eventually.
All right. And that concludes the 10 and 10. And there are here's the summary of what symbols we covered. And I will have those in the Market Watchers Live chart list, where you'll see all of those annotations that Tom just made. And with that, I know I have the next market update. So I'm going to get you to the candlesticks so you can see that, the candle glance. And here we go. All right, so these are the 2-day charts of the major indexes. As you can see, Dow started the day off right, and it is continuing to move up. It is now pushing new intraday highs. S&P had a nice update. It's been a little volatile this morning, but it did make that nice move, looking at a flag formation here, some consolidation sideways, and it is also starting to test intraday highs, of course, all-time highs. NASDAQ is also running upward. Again, really difficult morning, a lot of volatility for the NASDAQ as well as the S&P. We can see Russell 2000, small caps, dribbled downward most of the morning, but are now starting to make their way slowly upward toward the intraday highs for the day. And we've got the TSX, also a volatile morning. It's trying to push back up toward its intraday highs, but it still has some ground to cover. We can see that Treasury yields are up, pulling back slightly right now and reading at 25.38. UUP gap up and now starting to consolidate sideways. You can see commodities are having a very nice day. After a little bit of a difficult morning pulling back, they've now shot straight up, formed a flag, and now look like they're executing. Commodities are executing that. USO also having a really nice day, moving up and now reading at 12.56. Quite a big move on USO, considering we've been reading $10 for so long, and now we've managed to get up past $12. Gold, big gap down today for GLD, but it is starting to consolidate now and looking okay at this point. And we can see the VIX was up, but it is pulling back a little bit and getting even lower. We're now reading a VIX of 946. I'm starting to wonder if we're going to get below 8 at this point. We've got declines leading advances currently. Let's go take a quick peek at the market summary so we can see where our industry groups and sectors are following. And here we go. Go ahead and set it up by percent change. All right, sector spiders, financials, and healthcare are leading the way today, with utilities the only of the sector spiders in the negative, and utilities XLU are down almost 1%, 0.95% right now as the laggard, with all the other spiders currently running in the green. U.S. industries, biotechs, banks, broker-dealers all leading the way with moves up over 1%. And who are our laggards? Gold and utilities. Not a surprise again seeing that XLU move. And then we're, of course, looked at that gap down on gold. Take a quick peek at our scooter movers from the front page. And here we go. So our top 10 haven't changed too much. What I really want to look at are the ones that are making the big moves today. And we can see, they're big moves, 18 points, more than 18 points on the scooter ranking for Boston Scientific. Really nice gap up. We can see a double bottom there too that has executed with today's gap up. So looking pretty good there. Illumina is also having a nice gap up and breakout, which is again another reason why we're seeing them on the big scooter movers. Top up, top down. Who's having the most difficult day? Well, we can see that WMMVF nice big long red candlestick moving lower. AYI, and I think we've already talked about Acuity a little bit today, making a move up somewhat. Oh, I'm sorry. No, a gap down. You can see all the way on the right side of that chart. So not looking so good there. And I'm going to finish. I just wanted to look at gold real quick so I can show you what I'm looking at as far as gold. I know Tom was talking about being a bit on the bearish side. And I, on the other hand, am on the bullish side here. And I just wanted to give everybody a quick peek at my gold chart. And I can find that very quickly right in here and give you that gold update. So I've been bullish gold and I continue to be bullish gold. At this point, what I'm looking at having happen, okay, this is not the one I wanted. That's a messy chart. But yeah, I'm bullish gold right now. I think we're in for a pullback, and that's what I wrote about yesterday. And it looks like we are starting to head that way. I'm going to show you GLD right in here. We prepare so many charts, and I try and save them all in the same place, but I don't always get there. All right. Real quick here, because I know we have some under the radar stocks to look at. But yeah, we're getting that pullback. Tom had talked a little bit about a possible island reversal here. I think we're still going to pull all the way back down here to that 123 level to test these tops. We need to get a nice pullback. I mean, look at this straight up move. Yes, the PMO is decelerating. It probably will top if we get down here to test that support level, but I think we'll be successful coming out of it and make a move up to that 128 level for gold. With that, I am done with that market update. Did you have any comments on what I just covered?
Well, I wanted just to add on, I've been watching the tires index, and this is an index that's doing really well. And it's part of the consumer staple, so it's kind of ho-hum, boring to a lot of traders. But I do think that here to start 2018, we've seen a pretty significant breakout in this group. You can see that over the course, really since the top that we saw back in March of 2017, we've been downtrending in this channel. And over the past 3 or 4 trading days, we have broken out of it to the upside, which I think is pretty significant. Also, I think if you're looking at a weekly chart, it has begun to trade more bullishly. And this kind of gets back to what I had spoken about earlier. When we're sideways consolidating or trending nowhere, you can see that we just keep moving up and down above and below the 20-week moving average. But over the course of the last 3 or 4 weeks, we actually on pullbacks have been holding this rising 20-week moving average. Now we have broken this downtrend line, and you can see on a weekly basis, the MACD is just making a very bullish centerline crossover. So I do think the tires this is more than just a little bit of strength over a couple of days. I think this is a pretty significant breakout, and we could see strength here continue maybe throughout 2018. We'll have to kind of see, but at least for now, until we see a weekly close back below that rising 20-week moving average, I would remain bullish this group and treat this breakout as though it's going to lead to more strength down the road.
Sweet. All right. With that, I think we will move on to our final segment here called Under the Radar. And what I did as far as my under the radar stocks is I ran a scan. Alrighty. I'm going to get there. Okay, so I ran just a simple scan. I was looking for...
Hey, Aaron, you need to grab the screen.
All right, I'm trying here. There we go. All right, so the scan I ran for my under the radar stocks, basically looking for decent volume US stock. I want the 20 above the 50, 50 above the 200, and then I'm looking for some PMO crossover. So less than or equal. I want the PMO line yesterday to be less than equal. So basically it was heading down yesterday. It has turned up today. So that's what I'm looking at for these. I ran the scan and I ended up with quite a few stocks, 194, I think. So how in the heck am I supposed to take that down and figure out what to do? And I had just talked to you about RRG, and technology was looking good. So I did a sector search like this, and I just went through the tech stocks and through the healthcare stocks to come up with my under the radar picks. So I'm going to go ahead and do one of those real quick here. Okay. And on this, I have put it in our Market Watchers live chart list already, guys, so you can find it. So the first one I looked at for the technology was Universal Display. I know this is kind of a popular one that a lot of people trade. So as far as who they are, they're not under the radar, but I think they've just now had the breakout, and I just got that PMO crossover. So to me, it's been under the radar, and now we're looking at it. We could see some move past that. There's that ascending triangle. We got the breakout, pushed past this area of overhead resistance, tested it today. So far, so good. We'll probably want to see what that candle ends up looking like by the end of the day. But right now, I like the fact that it hasn't popped down back below that area of the breakout. So I think that's looking pretty good and quote unquote under the radar. And let's see, the other one I had was Neos, and this was in the healthcare sector. In this case, we don't have that breakout yet. And I know the PMO looks a little suspect here. Admittedly, it did look a little better earlier today, but it does look like it's getting ready to whipsaw back into a buy signal. And it just happened to have a sell signal, it looks like yesterday, which is why it came up on this scan. But I would put this on a watch list. It's come down, tested that 20, it's holding it, and we haven't quite gotten the breakout of this ascending triangle. And if we do, if you want to do measurements, that would pretty much get us back up here to test these highs that we had back in November. So I thought that one is kind of under the radar, and it is in a stronger sector. Let's see, LDOS, Leidos Holdings. Same sort of idea as with OLED. Did want to point out we also have this bullish confirmation on this stock as far as the PMO. Price bottoms rising, PMO bottoms rising, and now we got the breakout, and so far it's holding. So I think this one could be considered somewhat under the radar. Let's see, I also have Becton Dickinson to look at. And this one, there's a lot going on, but look at this nice clean PMO crossover that's lined up right now for BDX, Becton Dickinson. Nice breakout. I think that you could make a case. We had coming in here what looked like a head and shoulders. And when it did cross just below the neckline, but it bounced right back up, totally negated the pattern. And now what I'm looking at is a possible double bottom as price kind of came down off of that head and started to form this particular pattern. And we've now got the breakout above the neckline. We do have this overhead resistance to overcome, and it's not too far away. But I really like the look of this PMO crossover and the fact that we are sitting in a pretty good group. So I'm going to pass it back to you, Tom. I want you to have some time to show yours and save a little bit of time for some questions that came in.
Yeah. First of all, BDX is one that I think I mentioned on the Anatomy of a Trade. I actually own that one. So the break, actually, when it pulled back recently, went right down to a gap support level. So I was going to go ahead and just pull that one up too. I agree with you. I do like the stock, but I'll probably, just because we're getting close to resistance, probably be moving out of it here shortly. But you can see BDX came right down to this gap support. And I know when I was talking earlier with John Hopkins on during the earnings spotlight, we talked about AVAV and the top of gap support being a really good support level. And you can see here, this is a perfect illustration, I think, of BDX pulling back, hitting the top of gap support, and then turning back around to the upside. So it is getting close to resistance. I like the chart. I actually think it will eventually break out. I think it's got a nice uptrend in play, but there's nothing guaranteeing that it goes through now. They simply hit resistance, pull back, and might consolidate for a while. So that's why, for me, my trading strategy is to get in near the bottom. If it gets near the top, I just simply get out and take it. Yeah. For this particular sector, what I was looking, or for this segment, what I tend to do for the under the radar is I try to run a scan of companies that are trading much higher than normal volume. So you may not be hearing about it on CNBC. You might be hearing about it. It's not shocking to me that you are hearing about it here on Market Watchers Live, but ILMN was the one that I was going to talk about, and Aaron already talked about it.
We came up with the same one.
Yeah, but here was a beautiful breakout. The stock, first of all, it's on my strong earnings chart list, so it's one of the biotechs that I've been watching. I'm literally kicking myself that I didn't get it on this pullback and consolidation when the biotechs had pulled back as well, but I didn't. The stock has made a huge move though to the upside and is making a breakout, and you can see the MACD on the daily chart looks great. We go over to the weekly chart, and you'll see that it is now approaching a very significant level, and I think that is 240. So here we are at 244. This could be making a major breakout, and this is off of an uptrend with a long-term cup, very similar to what we've been seeing on the biotech index in general. But I love the stock. I think eventually this one breaks out and moves potentially quite a bit higher. But a couple other stocks I wanted to mention, and again, these are ones that you may or may not know about, but GBT, which is Global Blood Therapeutics. Check out the volume today. It's up $7.90, almost 20%. So it's not something I would be rushing into. But this breakout is pretty big, taking out that 45, 46 area and doing it with this kind of volume. I think this is a really nice looking chart, but I'd have to wait on a pullback. GBT definitely is a stock that could be under the radar that is having a very, very nice day today. GGB, this is a steel stock. We've been talking about steel, or I've talked about steel. I'm very bullish that group in 2018, and you can see that we are making a pretty big move up. But check out today's volume, which is off the charts, and look at this candle so far today. I would not be at all surprised unless we get a big reversal and move back up in the next couple hours. I would not be surprised to see this maybe mark a near-term top with this kind of crazy volume and a reversal off of that earlier move to the upside. So we'll have to see how this one closes. But GGB has been, off the charts here throughout the last couple of months, rising from $2.90 up to almost $4.40. That's about a 50% move in less than 2 months. So it's been a really nice ride there. TK, this is among the shippers. And I wanted to pull up the weekly chart here, because I think if you take a look across at the weekly chart after a huge drop in 2015, look at these reaction highs, all between about, I'm going to say $11.50. The earlier high was $10.58. So we're getting pretty close to a level where if this stock were to make the breakout, there's not going to be a whole lot of resistance, given that this was a straight move lower back in 2015. So TK is one worth watching. Just a couple more here. EZPW. Again, on a weekly chart, very interesting level coming across. I don't know if it looks, maybe to me, it looks a little bit like a reverse head and shoulder pattern, and we're trying to make the breakout. I think a close above 13 would be extremely bullish looking back at all of the failures at that level. And if you look back the last 5 or 6 months on the move higher, check out the volume coming in. So it looks like maybe some accumulation. A breakout above 13, I think, would confirm this one. And then the last one I had was Jack in the Box. And this one I like because it was down earlier in the week, and it's actually starting to rise back up. We've had great support at about the 90 level or just above 90. I think if I annotate this one, you can probably see that was a really key area of support that we saw. These were the prior tops. If I put another one in just showing these recent lows, I think key support on the stock resides probably from about 89 to 92. And we got down as low as 91 and change before we got this reversal. We are sideways consolidating right now. And if you wonder why, I mentioned like on BDX, taking profits at resistance. Look at what this stock did. Made a nice move up from about 90 to 110, came all the way back down near 90, and then on the move back higher, failed right at 110 at resistance. So all we've been doing is sideways consolidating. Sometimes they come back up and they go right through, and that's great. But it's very frustrating to have a stock have a really nice gain, in this case, say 20%, and watch it go right back down the tubes over the next couple months. So it's just my strategy to take profits at resistance. But Jack in the Box here, JACK, I think looks really good with this sideways consolidation off of an uptrend. And my guess is we're going to get a breakout above that 110 level sometime, maybe not in the too distant future. So that's what I had for Under the Radar. So there you have kind of a recap of the segment. And don't know. We got about 5-6 minutes left. I mean, what are you thinking about as we get toward the end of another trading day?
Well, I thought it was interesting. GBT actually was on my list of ones that I was going to go over as far as under the radar. So we had two that overlapped on that one.
Cool.
I know we have just a little bit of time. We've had a lot of questions just about scanning in general, but one of the specific ones was about how to scan a chart list. So I wanted to briefly show everybody how they can do that. And I'm just going to go into the scanning workbench. I'll look at one of my scans where we've done that. I've got one for cyclicals and financials. So here's the one for the financials. So actually, I want to go ahead and edit it just so you can see how to do this. All right. So you can see up here is where I picked my universe, as I call it. That's one of the first things you want to do. And by picking a group or a sector, you really don't have to pull out your low volume, too lower price, because these groups are already holding on to stocks that you don't have to worry about that. So I think going on a group or sector is nice. But if you want to add one, it's really just as simple as this. It's down here under sectors and industries. You could also do a particular index that way. But the question was, how do you scan it on a chart list? Well, just move over here and I have various chart lists. And so, for example, the Market Watchers, let's see, I have a DP Daily Update. So with this one, I can add it, and I'm going to just put that at the top because now I don't need what the group is. I have this up here. It's my first one. So it tells you, and that's how you can add scanning against a particular chart list. So I think that's really helpful. I do use it occasionally. And for you, Tom, I mean, when you have a strong industry group or whatever, this is another quick way you could go in and, pick that area and then just scan in particular on that particular area. But that's how you would do adding your own chart list to scan.
Yeah,
so that was a quick question.
Yeah, I use that all the time. I have a strong earnings chart list that has about 300 companies on it. And so I am constantly looking at stocks, for instance, in that list that might have, say, an RSI between 40 and 50. So I have a scan set up already for that with that chart list already included. So literally when you go to the scans on your member dashboard, you can actually just, if you go to the, when you get done with that, Aaron, if you go to that member dashboard page.
Oh, front page.
Yeah.
All righty, there we are.
I mean, literally, if you scroll down under the scanning, your scans, and you can pick your scan. So right here under that select a scan, if you click on it, you have your saved scans. Mm-hmm. And I already have it set up so that it goes into a particular chart list. So literally all I do is grab it and run the scan. Mm-hmm. And so you literally just do that and then hit run scan, and it quickly pulls them up.
Yeah, and you can see that's the one I did is I have that particular that list. It's got all of the major indexes and sectors, equal weight and regular in that particular chart list of mine. So I think that's really a great tool. And again, if anybody's just really wants any of my scans, I printed quite a few of them on Friday in the Market Watchers recap. So checking that out. Yeah, going into the week, my indicators are telling me to stay bullish, but we are starting to get to I would say, kind of a saturation point a little bit. We've had that, straight up move on the S&P. And, when you look at that kind of a move, it's just too hard to sustain that kind of an ascent. So my sense is we've still got some more upside to do in the short time, just a little bit. But I'm kind of expecting to get a little bit of a softness, either some consolidation, and maybe gasp a pullback. We'll have to see.
Yeah. Don't hold your breath too long.
Yeah. Next week, maybe.
Yeah. The way this market's going. I just think you have to just continue to play the rotation in the market. I mean, there will be areas that will rest from time to time. We saw that recently with the biotechs. They rested and now they're ready to go, and now they're soaring back to the upside. We've gone through many of the various industry charts, but even the tires that I looked at, you could see that over a period of time, that was a group that really wasn't participating. Now all of a sudden that's jumping back in and breaking out. So I think you have to be a little nimble, and it definitely is a stock pickers kind of a market. Even
Yeah.
though you think that the market's just going to keep going up every day and you just jump in and ride Facebook to the moon, I do think that we'll continue to see some rotation, and it'll be scary from time to time. And we saw it with stocks like PayPal and Square and some of this, of course, the Bitcoin, anything related to Bitcoin. We had a really scary pullback. I think the key is to try to stay with some of the areas of the market that haven't, been in a parabolic type rise and have pulled back, and provide a little bit more comfort, a little bit more safety. You looked at one of the charts you pulled up earlier, BDX, Becton Dickinson. I mean, that was a stock that pulled back even though the market was going higher. So there are plenty of stocks out there that will pull back. I just be careful jumping in stocks that have gone straight up for the last month, because those are the ones that are going to carry the most risk. So with that, we have come to the end of another trading session. I know we do have Bruce Frazier joining the show tomorrow. And then on Saturday, Greg Schnell will be hosting Stock Charts Outlook. So definitely check both of those out. And I want to thank everybody for stopping by today. We certainly appreciate you having you here. Please remember to complete the survey as you exit. So if you look at the lower right-hand part of your screen, you'll see a how'd we do area. You click on that link, and it's just a very brief one-question survey. We'd love to get your feedback. Let us know what you think of Market Watchers Live. As a reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everyone. We'll be back on Wednesday. Happy trading.